So we have gold to be able to break down for you. What I want you to observe is that how we traded gold last week. And when you come to YouTube Throne Trades, you will see in the last 3 days how we were looking for trades on gold and then the possible trades we caught and the next trades we're going to go into now. You just watch this video, it will break down everything for you. So this is the trade we caught. If you do Throne, you come to the Throne, you will see here, this is the trade we caught. Okay, that is the sell. And the first sell, we actually explained it in this video here, that if market breaks below that support level, we're going to look for sells. And then we got that. And then when we had this, I was saying, after the sales were done, I was late saying if gold breaks above 5,140, we are going to be bullish. And then this is because of the political events that are happening. Sometimes the market prepares itself to do that. So, and right now, let me just break down for you how we're going to trade gold the next time. Also, the next thing I want you to notice here is that starting now, we actually have daylight saving. We have daylight saving beginning as of 8th of March. So what I want you to notice that is the volume that is brought by the different market sessions. You're going to have more volume now at a specific time different from the time it was. So what you do if you're in trading from East Africa, you just need to know you subtract 1 hour, meaning New York will be starting at 3 p.m. And then also the Tokyo session will be starting at 3 a.m. And then London will be starting at 10 a.m. Frankfurt at 9 a.m. Those are the times in which you have to expect volume to be able to kick in. So volume kicks in when you have more than 2 sessions colliding at the same time. And the best time to be able to do that is from 3 a.m. to 4 p.m. to 3 to 4 a.m. That is when you have Sydney session colliding with Tokyo sessions. And then when you come back to 10 a.m., that is when you have the Frankfurt session colliding with London. And then at 3, 4 p.m., you have London with New York. So those are the best times you're going to have volume, and volume is very important. So once we have that, let me just break down gold for you. So the first thing we always do, this is the daily time frame for gold. So you mark your all-time highs. This is our all-time highs. And then these are our lows based on this week. And then from these lows here, we see a scenario where the market failed to reach down when it reaches to this low, and then these are the low. And then we also have these are the new low. So what you see here is that what price is doing is that price is failing to form lower low. Instead, it's forming these lows, and then the market doesn't reach to this low, and then the market doesn't reach to this low. So this is an indication that the market is bullish. So one of the ways for you to be able to know bullish market is when the market is failing to break previous lows. And then once you have it, I want you to mark also this visible high here. This is a high. When the market reaches there, it will react. And then I want you to notice the difference between this low and this other new high was actually here. So you are going to also mark it that. And this is whereby you can clearly tell here, whenever price comes here, there is a reaction. So here we've seen the reaction, and then price is actually bullish. Now it has broken back above this price difference. So the next thing I want you to notice here is that you also mark this, because this is an area where the market will also break, because there's a difference between this low and then these highs is also here. That is an area where the market will also react when it reaches there. So once you have these, you can now switch to a lower time frame. But I want you to observe is that the easiest way for you to spot that the market is bullish is when you have these lows not being broken. And then the market continues to break these highs. Like you can see, this high is broken, and then this high, and then this high. So once you have that stated, you can now switch to your lower time frame, which will be 4 hours. And this is what I was saying. I was saying earlier on this tweet, I want you to observe the time of this tweet, the date. This was on around 11:48 a.m., 6th of March. That was like 2 days ago, when you say that if gold breaks above 5,140, it's going to be bullish. So let me just break that down to you, this 5,140. So once you have this, What we need to do is come to the 4 hourly. This is the level I was looking at. Now let me break it down. Remember we had a low here, and then the market failed to reach this low and then pull back from here. And then this is the high I want the market to break. So I wanted the market to at least start breaking some highs. So this is the level, 5,040. I wanted the market to break it. So the moment the market breaks it, I was like, yeah, I was bullish. This is where I actually have my buy positions. And now, let me just explain to you why this buy position is very important. Because you have a low that the market has created, and then the market pushes back up here to form this high, as you can see. And then from this high, it comes, instead of coming to this other low here, the market fails to reach this low. And then from here, breaks the first high. So we have this high here, which has been broken. So the moment you have market failing to reach lower lows and then breaking existing highs, this is an indication that price is going to actually be bullish. And this is where we had our buy order. So if you've missed out on this, the next thing you want to wait for the market to actually break this also. Once it breaks this, then you can also have a buy position based of this. So now, these are the areas the market is actually going to react from. When the market reaches here, there will be a reaction. So if there's a sudden break of this high, the reaction will be here. That will bring price pull down. And then this is also another reaction area. So what you want to do, if you feel you've missed out on a trade, wait for the market to react around this level. If it doesn't change the trend, what I mean that from this level here, if the market pushes here and then doesn't come to break this low to do this, then we are still bullish. And these are areas you can begin to look for those secondary entries. So this is what we want to see on gold now. The only time when we will know that we're wrong and the market has changed course is if it comes to start breaking these lows here. And we'll break these lows here, then we know we are going to head down to these other lows here. As you can see, these are lows. Market is failing to break, failing to break, failing to break, failing to break, and then this one here. But should it break one of these, then we know that the market has changed course. But if it doesn't do that, continues to do this, then we know we could head to all-time highs. So this is what we do with gold now. You just have to watch it and then practice proper risk management. If you get an entry, you don't have to risk all your money on it. Risk a decent percentage so that when you're wrong, you can have money to trade on the next account. So the next thing I want you to just observe here, you can clearly tell here, even if you drew your trend line, okay, if you drew your trend line here, you're going to observe, like a trend line, you just need 2 points. So here, you just understand now, when the market comes here and fails to form a lower low, and then pushes up, doesn't reach this low, that is actually, the market is telling you, this is the origin of trend lines. So trend lines are formed, let me just break it down for you simply here. When the market forms a low and then pushes back up, this becomes your low. If the market doesn't reach this low and then comes and pulls back from here, that is also where you have your trend line. So the next thing that could also happen when the market does that and then does that. When you have 2 points, that is the origins of trend line. So trend line is basically a market structure whereby the market fails to break a previous low and then pulls back to break a higher high. The same thing we had explained last time about resistance and support. So what I want you to notice about support and resistance is that resistance are formed at all-time highs. When the market reaches these areas, that is the potential resistance area. So now you need to know where resistance and supports are formed, where trend lines are formed. And all of this is just based on the market structure. The same thing with supports. This area now is the support area because this is a low that the market is failing to break. It has broken it, seems to have broken it out and then faked out and then pulled back in. And then the same thing also here, breaks out of it and then it's a fake out and then pulls back in. So this is a strong support that is holding price from going further down, hence the formation of this trend line. So if this trend line is not broken, then we are still bullish. So let me just put it that way. But now you understand how trend lines come about. It's just market failing to form lower lows. So understand how trend lines are formed, how supports and resistance are formed, and then you will be good to trade.